What's up everyone, this is Ryan here and welcome to CG Market Watch. Today, as per normal, we're going to be talking about the overall market sentiment. At the same time, we're going to be covering a very important topic about why money is flowing into cryptocurrencies, and last but not least, beware of the high yield investment programs or scams out there, especially in the month of June and in this bear market. Today, of course, we have Andy and Mike to join us for this episode once again, and we're going to be talking about the IMF stand on, or IMF mentioning that cryptocurrencies are going to be, the old fiat system or the legacy systems, they have to compete with cryptocurrencies, and if they don't innovate, they're going to probably have a hard time. So Mike, you probably have some insights on that, and of course Andy is our resident researcher, at the same time also our lead analyst. Right now, I think the most important thing is to kind of decipher what this needs to do, right? What we need to do and how we can navigate or help people navigate through this space. Now, last but not least, this is not financial advice and it's just our personal opinions and recommendations. So yeah, Mike.
Okay, so the IMF, actually not really IMF, they came up with an article explaining about money in the digital age. So it's written by Dong He, or Dong He. Actually don't know the pinyin.
Yep.
So
or maybe it's He Dong.
You are wrong.
Okay.
Basically, he's the Deputy Director of Monetary and Capital Markets Department within the IMF lah.
Right.
So he's mentioning in the article how cryptocurrency is changing the way money works, how banks have to start rethinking how they are going to tackle this problem, because if banks don't hold the monopoly on cash, then their monetary policies become a bit less effective in the economy lah. So for now, it's saying that cryptocurrency is missing three components that makes it a stable currency. So the first one is protection against risk, because, well, it's not.
Okay,
The next one is it's not able to respond flexibly to temporary shocks in monetary demand, which is what all of us profit from lah. But it shouldn't be the case for currency. And I don't know what this last one is, but it says it doesn't have the capacity to function as a lender of last resort.
Right. Yeah. So it does not have the capacity to function as a lender, as a last resort, as with regards to cryptocurrencies at the moment. That is true. Okay, so maybe I can share on the last point, because cryptocurrencies at the end of the day are so-called minted, right, via a smart contract. These are not banks. These are not financial institutions. Neither is cryptocurrency considered a sovereign. It's not issued by a sovereign, not a legal tender, right? So at the end of the day, if you want to be a lender, you need to at least have the licensing by a sovereign nation first, or given by the central government, right? This is just the way it is. You can't be coming in, and you can operate as a private entity, right? That's not a problem, but you're definitely not going to be having your currency that you minted from a smart contract considered as a legal tender. That's probably what it means as well. So I think Andy, you probably have your insights as well.
Yeah, like so the thing is, the challenge to central banks is actually more of control, and the only way to make the currency or the fiat currencies more exciting, it's via two main ways, which is interest rate changes and also regulation. So by regulating cryptocurrency, therefore making fiat currencies more stable and actually making it more attractive. But you know, as time goes by, and as millennials like us, you know, we grow up and we start realizing that, hey, you know, peer-to-peer currencies, digital currencies are more attractive, right? I can send money when I don't have any fiat currency. I want to buy stuff, I could just borrow from Mike, and then I could transfer the money to him via my app, right? This is more exciting than, you know, really cashing out from the ATM. So no longer are we at those age. So that's what the challenge to central banks. And of course, a lot of countries, especially Eurozone, they always do quantitative easing, right? Which is to print more money, to put it in a simpler way. That actually lowers and devalues the currency value. So at the end of the day, central banks are basically there to just monitor the interest rate and just to make their currency competitive. But at the same time, it's not making it more valuable, and that's the problem.
But do you think that that banks, even if they had their own digital currency, right, would they actually fix? Because the whole purpose of printing money on year, right, is to kind of add liquidity to the economy, right? Also to change out new notes. At the same time, also because there are people spending and the notes have to be replaced. At the same time, it's kind of in terms of inflationary as well. There's an inflationary aspect as well. But if, for example, they suddenly change to digital currencies, would that mean that they're going to stop issuing tokens as per se, or stable coins? Or will they still continue to every year they're going to still have an X amount to go back into the system? This is something that I'm a bit curious, because right now, if you're going to remove printing of fiat money, right, I think it brings down a lot of costs, right? Because everything is done via a smart contract. It's so much more efficient. You can just close down all these the printers, right? And then from then, it's so much easier to trace and track. Do governments actually want that? I mean, they already trace and track the notes anyway, right?
Yeah.
So it's kind of great, especially if you talk about AML and you're so worried about anti-money laundering and terrorism and whatnot, and all these notes all can be accounted for, especially if it's a digital stable coin.
Yep.
So I mean, probably you all have any thoughts that you want to jump in on that?
I mean, crypto is kind of doing the same thing. They mimic inflation by releasing certain amounts every year. So that is like one way that is becoming more like real fiat money.
Yes.
So I mean, banks are already doing that. If they just change to crypto, then there is no difference. If they make their own like bank coin, then it's basically just crypto in another name, just as endorsed by a bank. But it still doesn't help them with their overseas transfers, because peer-to-peer transferring, like if I pass money to Andy, I'm not charged anything. But if Andy stay in like Switzerland, then he has to wait a few days to get the money, then pay
exchange rates, and
so that's where crypto shines, right? If I really want to buy his services, I don't have to give him like $5 on Fiverr. I can just like give him like 5 Zilliqa.
Or something. And it's instant. It's fast, it's borderless, and it's really quick, and the fees are very low, and it's very convenient, right? So I think there are many use cases that we can talk about, but the most important thing is we do see that there's a lot of people actually starting to put more money into crypto, which is our next topic. So putting our money into crypto has been kind of the hot thing of late, right? Yes, it kind of trends in the sense that sometimes a lot of people catch the news about cryptocurrencies. As you can see, CNBC has dedicated a whole segment and section, and you are seeing the Bitcoin prices, Litecoin prices, Bitcoin Cash prices, Ripple prices, always being displayed. And at the same time, I think recently we saw Ashton Kutcher appear on Ellen DeGeneres, and he gave a very generous donation of about, I think, 3 or 4 million to her wildlife fund. So there is a lot of coverage in the mainstream media about cryptocurrencies at the moment, and we cannot help but want to be curious about it, right? Especially if we've been hearing a lot of gains, people have been selling off their homes to even put money into Bitcoin. All these kind of very sensational stories. But what are your thoughts about this new phenomenon, and at the same time, are you compelled yourselves? I mean, we are all invested in cryptocurrencies, by the way, so it's not like something that we are we are unfamiliar with. But I think to have this trend continue, what do you think is the social implications? Yeah, maybe anyone can jump in.
Let me go first. I think the main social implication is that people. Okay, this is just between me and him. We were discussing that day, and he just met a friend, right? And the friend asked, do I have to buy 1 Bitcoin? So people are still unaware to that stage where people are asking, they don't know that they can buy 0.1 Bitcoin, right? And that's the general public, and that's the general consensus. So I mean, Mike even made a point that lesser people know about this, the better. It kind of meant that we are at the forefront.
You know, the better.
Yeah, and it's kind of like we are at the forefront of what's going on, right? Because most of the people don't know, like they're trying to find out, but kind of scared, don't know what to do, things like that. And I mean, social implications. Maybe you can say it better. Sociology major.
Well, the first one is it's better for them to have no knowledge of crypto than to have half the knowledge of crypto.
Okay.
So if they have like a lot of misconceptions, like cryptocurrency, I'm gonna like buy food with it, then you go with the wrong idea, because it's not really a currency, it's like a crypto asset.
It's right.
I wouldn't buy water with gold bars, so I also wouldn't buy like chicken rice with Bitcoin. I would be buying it for the store value.
But you can't. That's the problem.
Yeah, I can't.
You can't buy. Especially in Singapore, there's so little merchants that, especially for food, right? Water, just the simple necessities, we can't even spend it here, which is very frustrating. But of course, overseas, they are a little bit more receptive, you know, and we actually would love to start, probably have a travel series. Maybe you can comment about which countries are very pro cryptocurrencies, and maybe CG will probably be there to visit and really test this out, because in Singapore we only have like one merchant that I think is a cafe, but we can't go all the way to that cafe all the time if we want to spend our crypto. It doesn't make sense, right? So this is something that we notice, and even though we as a service provider ourselves, we do our consultations and everything like that in cryptocurrencies, we are also having the issue of needing to be able to hedge that risk. So especially as a consumer yourself, so far when you say that you want to have very little knowledge, but right now when you're someone who has been in the space for how long, like you've been investing in cryptocurrency for how long?
7 months maybe?
7 months. So during these 7 months, right, other than trading, do you have a further appreciation of it, or you finally thought of a way that you wanted to spend it, or it's just purely right now just to invest and trade?
If I'm looking at traditional places to spend it, like I want to go to a cafe and spend it, then there's no real use case yet lah. But if say more and more people know about it, and let's say me and Ryan lah, I'm willing to buy his couch for like half a Bitcoin. As long as he agrees and I agree, then I mean we are done with it.
It's a mutual thing.
Yeah, so okay. I don't have to go through any paperwork. I don't have to like give invoice or anything. I just send you the smart contract and then we're done.
So it starts off, I guess.
It starts off
peer to peer.
Which is how it started in the first place, and it's how it's going to continue for a while. So after a while, people realize that why not just put it all on a platform where we can all do this at the same time. Doesn't have to be Bitcoin, doesn't have to be any single currency, but as long as two people are willing to transact and you determine the values like that, right, then it starts to get momentum.
I think at the moment there are a lot of marketplaces that are also starting to appear, right? The problem with these marketplaces, unfortunately, is that the adoption rate is not fast enough. Also, at the same time, when there's not enough merchants who are putting their merchandise, because they're so familiar with the traditional ones like Shopify, Amazon, you talk about Alibaba, all these websites where you can already put your merchandise already, right? People are just more familiar, right? Because it's just more mature. It's kind of practical. It's practical, right? That's the other thing.
What do you and Andy do with the money? You have to worry about how am I going to hedge it?
Yeah, well, we pay salary, right? We buy our food with it as well, but we have to, at the end of the day, convert it to fiat first. It's not that we can use it directly. We would love to use it directly, because I think as advocates and professionals in the space, we want to be able to kind of aid this economy to kind of start pushing forward. It's not just about, although we are not developers, right? We cannot improve on the technology. We are waiting for developers to improve on the technology, but as a consumer base, we are only able to use the money, and that's from a transactional basis. So perhaps, maybe if you have some ideas that you can help by providing services, or you have products that you like to sell, maybe you should consider looking at any of the marketplaces out there that is user friendly, and start testing those things out, or even accepting cryptocurrencies or digital assets as a form of payment.
Japan.
Japan.
They do, right? You can buy cameras with it.
Yes, and we probably want to figure out why certain countries are so pro and so willing to be able to accept cryptocurrencies as a form of payment. I think that's something that I'm wondering what. Anyway, Singapore has always been a little bit slower in terms of adoption. Okay, and I think this is something to do with the fact that we are conservative, rigid. But at the same time, we are also quite open, because as you know, Singapore is one of the most popular places to start your ICO. Okay, it's opportunistic as well. Okay, so the next thing that brings me to the next topic, which is about opportunity. But not such a good time, not such a good kind of opportunity, which is the high yield investment programs. Now, to have this full disclaimer, there are two types of high yield investment programs. One, high yield investment programs is a general term that is used for any kind of financial instrument that actually can provide a return higher than what the banks are providing. It's considered a high yield investment program, right? But these kind of high yield investment programs that are offered, and which is what we're going to talk about, which happens to be coming online, is usually not safe. They are not safe. It's just a matter of time before something happens, meaning that they usually they usually will exit. So the legal side is that legal financial assets, right, are basically by the banks. Whether they have good intentions or not, they usually last longer, okay, than of course any of these online stuff. But being that they are licensed and they are and it's by a bank or financial institution that is licensed, okay, it's okay. Okay, now then there's the high yield investment programs or HYIPs that you see online that are giving you ridiculous amounts. Let's say we talk about 5% a day to even, what have you seen of late? You mentioned that
you mean
per
those
hour.
unreal?
Like the unreal kind. So per hour you're getting what, 7%?
6% per hour.
6%
for 32 hours.
per hour, guys.
Okay.
6% per hour. So let's just put it in the sense or in the shoes of someone who has never invested before, who has never had these kind of returns before. When I hear such returns, firstly, I will be slightly skeptical, but at the same time, I will be very curious. And I will start maybe with maybe a few $100s, right? A few $100s is not difficult. But what I'm gonna do is that eventually when I see these returns, I'll be convinced, and what happens is that I'll put more money. And then what happens is that because these projects will eventually close down, just like BitConnect, right? BitConnect was running for a good period of, I think, 1 to 2 years.
Yeah.
That was one of the biggest scams out there, and a lot of people were talking so fervently because they were early into the game and they were making very good returns. But at the end of the day, it started to close. It eventually exited, right? Because the Bitcoin prices tanked and the whole thing just shut down. So what I'm just trying to say is that at the end of the day, this market is, being still a bear market, is going to attract a lot of all these scams. So CG would like to warn you guys that don't be tempted by all these schemes, all right? And be very, very watchful. When you see 1% per day, when staking is 4% per annum to 5% per annum, it's really going to be very disastrous, especially if your initial experience of cryptocurrencies is to venture into a higher investment, an online higher investment program. It doesn't matter how strong the marketing is. The moment you hear more than 1% per day, run to the hills. Okay, it's a red flag. Okay, yeah. And here at CG, we actually want to teach you guys how to fish, try to understand information, and at the same time be able to be smart investors. Right? So if you are interested, of course, in this space, you want to learn how to create a portfolio in cryptocurrencies and even trade professionally, you can check out the links below. Join our Telegram group, it's completely free. But if you're interested in our premium group, we have a link in the Telegram group for you to join us, and we'll see you in the next episode. Bye guys!
Bye guys!